Hello everyone and welcome to another video on the channel. Today we are going to go super deep. Okay, we're going to be talking about supply and demand, and this will probably be one of the last videos you will ever need to watch. Okay, we will cover every single thing that you could need for supply and demand trading. Okay, so we're going to start off with analysis. We're going to be talking about entries. We're going to be talking about targets. Okay, this is strictly a technical video. This is nothing to do with risk. This has nothing to do with psychology. If you want to know more about risk management, we have a video about that called Forex Risk Management 101, which where we go super in depth, and you probably don't need any other risk management videos. We also have some psychology videos, so definitely take a look at that as well. But for today, we're going to go super in depth and super technical with supply and demand. So for supply and demand trading, like I said, we're going to start off with analysis. For analysis, we need a certain time frame. With entries, we need a certain time frame, which is obviously going to be a lower time frame than this. If obviously we want to have good risk to rewards, better entries, and just make more money in the end. Okay. Yes, you can, use this for an analysis and use this for entries the same time frame, but your risk reward is obviously going to be less, and you're going to make less money in the end. So to start off, you have a couple of examples that you can use for analysis. You can use a weekly time frame to analyze, to find your supply and demand zones. You can use a 4-hour, you can use a 15-minute. Some people use a 1-hour. These are the time frames that we personally use for basically supply and demand zones. And yes, we started to look more at 15-minute stuff as well, as we see that they play out very nicely. And it's just some extra gains that we can use for our bigger trades, such as like weekly and 4-hour, where we obviously make most of our money. And just a side note, you guys already probably know that we just trade GBP JPY. We don't trade any other pair. So this is our main pair of focus, and we definitely don't need anything else. So in terms of entries, we're going to use lower time frames. So for the weekly, you can use a 4-hour entry. For 4-hour supply and demand zones, you can do 50-minute entry, for example. And for 15-minute supply and demand zones, you could be using 1-minute entries. In terms of targets, they depend on each time frame. So if we're looking at weekly zones, usually on average, okay, and this is everything is on the lower side, guys. I'm not trying to force anything here. There are weekly zones that obviously do a lot more than 2 to 400 pips. A lot more sometimes, but this could be a nice target for beginners. Okay, for 4-hour zones with 50-minute entries, 50 to 100 pips is definitely a nice target. And for 50-minute zones with 1-minute entries, 30 to 50 pips is more than enough. Okay, you don't need to be more greedy. So knowing this, okay, we're obviously going to go more in depth with target, but knowing this, you can combine this with other targeting methods, which obviously we will talk about very soon. So we'll start off with analysis. So for analysis, we want to see two things. We want to see, first of all, a break structure. So as you can see, we had a high over here. We have a high over here. Okay, let me just draw it so you guys can see it. We have a high over here. Okay, and we want to see this high to be broken. It broke the high. Perfect. Okay, it broke the high with this move. What happened? It came back to the level that started the whole move that broke the previous high or previous structure. So this is where we're going to be entering. This is our breakup structure, and we just wait for the pullback to come back to the level where it started, and this is where we will enter. Now, second of all, we want to see fresh levels. What does a fresh level mean? Fresh level means a level that hasn't been touched yet, like this scenario. Okay, this would be the move, like this, then you extend to the right, and you wait for price to come back, and this would be the fresh level since it's the first time it enters the zone, and then it keeps moving. Now here is the exact same scenario as above. The only thing that changed is that it came back to the zone. So this would be the second time already that price is coming back to the zone. This would be the first time and this would be the second time. So we try to avoid trading these second times. This wouldn't be a fresh level anymore. So these two things are very important on the analysis. Okay, on our analysis time frame, which could be the 4-hour, the weekly, or the 15-minute. Now let's talk about entry, stop losses, and further on targets. So for entries, we look at two things. We look at bearish and bullish pin bars. We have bullish pin bars, and we have bearish pin bars. Okay, I'm gonna look for bullish pin bars in buy zones, in demand zones, and we're looking for bearish pin bars in supply zones. We have bullish engulfing. Let me just draw it properly for you guys. You have a bullish engulfing of the previous candle. Very good entry candle for a buy zone. And we have bearish engulfings. Like basically the same thing, but the opposite. Which would look something like this. Okay, this would be a bearish engulfing and would be a very nice candle to sell right here at the bottom or to buy here at the top. Okay, so let's remove all this so I don't confuse you. So these are the two candles that we are looking for on our entry time frame. Now for stop losses, these are just averages, guys. Obviously, the better you get, the better entries you will get, and the better tighter stop loss you will get. So for a 4-hour entry in a weekly zone, usually the stop loss is between 30 and 50 pips. Sometimes it's a bit more, sometimes 60, sometimes maybe 25, but this is averages. Okay. Now, if you have a 50-minute entry in a 4-hour zone, usually the stop loss, is between 10 and 20 pips. Okay. And for 1-minute entry in 15-minute zones, the stop loss is usually between 5 and 10. Okay. Guys, remember, these are averages. Okay. This is not a strict rule. These are averages. We place our stop loss a little bit beyond our entry candle, whether that's a pin bar or an engulfing. And this is what we've seen from a very long time already of trading. These zones with these entries, we're seeing that these are our usual stop losses. Okay, so keep this in mind when you're trading. Let's take a look at targets. So, like I said here, okay, very important. Take into consideration the pip amount for each time frame. If you know this, like I just showed you in the beginning, we know our targets are our average target's going to be this for each time frame. If we are at a certain time frame, we chose a certain zone, whether that's 50-minute, 4-hour, or weekly, we know more or less what we can expect, what to look, not to expect, but what to look for in our trade in terms of a target. Okay, then obviously you can combine this with three things, which is the next higher low, taking into consideration always the pip amount. So let's say we have a 15-minute zone, right? We have a 15-minute zone, and there's something like this, and price comes back to our zone. We enter right here on our smaller time frame. Okay, well, actually I didn't draw it properly. I should draw it better. Maybe I should draw something like this. Okay, and let's say this is a 15-minute zone. 15-minute. Okay, so we know that we have to look for 30 to 50 pips. So maybe if we target this low, let's say this is a 40 pip move. Okay, let's say this is 40 pips to this low. Then if you enter right here, this would be a good target. Don't mind the pips right now, this really depends on the time frame we're at. But if this would be a 15-minute low, and if this would be 40 pips, then this would be our target. Okay, so we could combine our pip amount with the next higher low. Second option is the next supply and demand zone. Okay, not only can we look at lows or highs, we could also look at the next supply and demand zone. We know that price usually moves from zone to zone. So knowing that, we can target the next supply and demand zone, but again, taking into consideration the pip amount. We can use volume ranges as well. Okay, if you guys don't know what this is, it would be this tool right here, fixed range volume profile, which you can find where the long and short positions are right at the bottom. Okay, and you just draw it like this, and it will show you the whole volume of the price action of the range that you chose, where the point of control is, which is the level where the most volume was transacted of this broker. Okay, so if we are trading a zone right here, and we have move, and we have some ranging going on here, and then we see this, maybe using this volume tool right here, maybe it will show us that the volume is, for example, right here. So what we can do then is target the volume range, but again, take into consideration our pip amount. Okay, so these are basically the main things that you need to understand for supply and demand. I'll go back to the beginning. We have analysis, we have entries, we have targets. Now, as an example, I could use a weekly zone, for example, with a 4-hour entry, or I could use maybe a 4-hour zone with a 50-minute entry, where we'll see more examples. So I will be removing all this, okay, so you can take screenshots of everything I showed you guys earlier and save it and use it for yourself, so you can see it in the future and basically start creating your own trading system. So as an example, we can maybe use a 4-hour zones with 50-minute entries. Okay, so let me just remove everything. Let's bring back the candles. Okay, and let's take a look at a 4-hour zone that played out. Let us take a look at this supply zone right here. Okay, so we know that in terms of analysis, we need to see a break of structure first, which is what we saw. We saw a move that broke previous structure or a previous low, like this. Okay, so what we have to do now is, once this is a valid break of structure, we draw a zone and we look if it's a fresh level. Is it a fresh level? Yes, price has not come back to the zone yet. So now it's just waiting time, waiting for price to come to the zone. It's waiting time, guys. This is all about patience. There we go. We're getting close to the zone again. There we go. So what are we doing now? We're going to our smaller time frame, entry time frame. And we're going to be waiting for a bearish pin bar or bearish engulfing. We have to keep in mind the timing as well. So it's either going to be during London or New York, okay, which is when most of the moves happen. So London is opening right now. You can see this engulfing, but guys, price didn't even go in deep in the zone. Okay, it's just at the bottom. we're not interested in that. We want to see price really entering the zone, okay, and seeing then a certain reaction. So now it's just waiting time, seeing maybe it won't happen during London, so who knows, maybe it will happen during New York. Okay, let's see, New York is opening. There we go. This is exactly what we wanted to see. We're seeing a strong bearish pin bar in our 4-hour zone, pretty deep into zone with a nice 15-minute entry. Okay, so what are we doing? We're entering right here with our stop loss a little bit beyond. 17 pips, what do you know? Between 10 and 20 pips. What is our target going to be? We could be targeting 100 pips, which would definitely be a valid target. But you have to keep in mind, guys, that these targets that I gave you are just averages. Okay, you can understand in the future, once you get more used to trading these supply and demand levels with the entry types that we showed you and all that stuff, you will see what zones can actually show a better reaction and which not. Here, for example, we're actually within a weekly zone, so the reaction can be pretty strong. But if you're taking just this 4-hour trade, you could be targeting the next demand zone, which would be this one, which would be a little over the average. It would be 100 and almost 50 pips. And then it's just waiting and seeing if price is actually respecting our entry, respecting the zone, and going to our target. Here, it just went beautifully to our target. Okay, so this would be a perfect scenario of a break of structure, of a fresh level, price coming back to the zone, showing us an entry candle that we are looking for in our entry time frame, and we're targeting the next demand zone, keeping in mind the usual pip amount. This case, it was a little bit stronger. Why? Because it was in a weekly zone. Okay, if you're going back and you just go to the weekly, you will see it for yourselves, which I recommend you do, because the weekly are very strong reactions. As you can see, this was a beautiful example of a trade. Okay, this was obviously a sell trade. Let me just look if I can find a buy trade. Let us see if we can use some. There's another sell opportunity right here, another sell opportunity right here. Let us see if we can find any buy trades. So here we can find a valid buy zone. We are seeing this level right here, this move. Did it break previous structure? Yes, it broke this high and this high as well, as you can see. So this is a valid level. So what do? We draw our zone. Is it a fresh level? Yes, price has not come back to it. Yes, it is coming back right now. So it is entering the zone. What do? We go on our lower time frame. Okay. We are looking if we can see an entry candle. Here we can see an entry candle. Okay. This would be a valid one. Okay, this would be a valid level of entering. Maybe we get stopped out on one trade or one candle, who knows? Okay, let's see if it actually goes deeper within the zone. So it looks like it is ranging. And let us set our target first, actually. So let's target maybe the next hike, which would be this one. And let's target exactly 100 pips, okay, which would be 1 to 6 something risk to reward with just one entry. So let us see if this can play out. So it goes deeper. One loss. No biggie. Another very, very strong bullish pin bar during New York. Okay, let's enter. So keep in mind we had one loss. As you can see right here, since this is a very big candle, our stop loss is bigger than usual. Okay, it's not between 10 and 20 pips, it's a little over. Maybe it's 26 pips. Okay, so let us see if we can target 100, which wouldn't be a great risk to reward. Okay, we wouldn't be happy with it. So maybe we're going to target the next high or the next high. And we're going to see how price reacts when it's 50 to 100 pips in profit. We're going to see how it reacts to this level. You have to keep in mind again, where are we? We are reacting to a weekly zone, as you can see right here. So the reaction could be pretty strong. So we could be targeting a little bit further. Okay, so let us see how this one plays out. Another bullish pin bar, bearish pin bar, bearish pin bar, bullish engulfing, also a nice entry. Another bullish engulfing, a nice entry. Let's see how this can. Another bullish engulfing, nice entry. So lots and lots of entry opportunities, guys. And there we go. Price is starting to react to our zone. And let us see how this one plays out. And there we go. It played out nicely, hitting our target. Keep in mind we had one loss, so we're still very nice in profit in this trade. So guys, these are just two examples of one sell zone or supply zone and one demand zone or one buy zone. So guys, this is basically a simple guide of how to trade supply and demand, covering analysis, covering entries, covering targets, and this is really much it. It doesn't get more complicated than that, okay? And it shouldn't be more complicated than that. You don't need any indicators. You don't need any all those patterns and stuff. You can see how simple this is. You know, sometimes it will work, sometimes it won't. If it works, you will make a lot of money. If it doesn't work, you will lose a little bit of money. Okay, and this is the key in trading. Obviously, this is a very simple design trading system that works, but this has to be combined, obviously, with a very solid risk management plan, or system, whatever you want to call it. And like I said earlier, if you don't have a risk management system yet, just check out our video about Forex risk management one-on-one. You will definitely find it helpful. So guys, really appreciate you watching this video. We hope it was helpful to you in any way. If you have any questions about this, just let us know in the comments down below. Send us a DM on Instagram. We'll be always more than glad to help you out. We would also appreciate the like or the sub if you haven't already. And if you're looking for more in-depth training, you can always take a look at our link, which is in the description to our website, where you can watch a case study, see what we're doing with the members and all that. If you want more info, you can always book a free discovery call with us. All right, so guys, thank you for watching. We'll see you in the next video.